let's talk about the class for today and what we're gonna be seeing. If you guys give me 1 second, let me pause the screen for a second. There we go. All right, just trying to make sure that that we're ready to go before we start. Can everybody hear me? Give me a yes or an okay if you can hear me. Give me a yes or an okay if you are able to hear me. Just wanna make sure that everyone's able to hear me. All right, thank you, thank you. Perfect. So we're gonna be looking at the intermediate return booklet, and this is in your this is going to be in your materials. So as you can see, this is a different batch of scenarios, and we're going to start working on this today because we're going to add a Schedule C here in a minute. So what I'm going to do is I'm on the intermediate return. I'm going to go to section or scenario 2, and I'm going to be working with this taxpayer, Glenn Brown and Barbara Brown, and apparently I need to enter a W-2, and I also need to enter a healthcare coverage, and I also need to enter Schedule C. So I also need to enter business use of home. So for the purpose of, for the sake of time, I'm not going to do W-2 because you already know how to do that. But you'll see how this is created, right? When someone has a W-2. So the first thing I'm going to do is I'm going to look at this person's this taxpayer's scenario, right? So the first thing I look is taxpayer Glenn and Barbara Brown. So that means I know that this is a married filing jointly return. I also know that they have Social Security, so we have Social Security for him and Social Security for the spouse. We have their birthdays, their address, phone number, occupations, and then additional information here is Glenn and Barbara are married, no children. Glenn works as a court reporter, runs a craft business, so he has a side business that he runs out of the home. Glenn covers both himself and Barbara on the health insurance at work. That's fine. We're not going to talk about insurance today. And here, let me remove that. We're not going to talk about insurance today because we talked about that extensively yesterday. And then the couple had several medical expenses last year, and they would like to see if they can deduct to itemize deductions, right? So this is going to take you back to your old notes, right? Itemized deductions, out of home, running a business out of home. So what we're going to do is we're going to move to the system, and in the system we are going to open that return. If you haven't opened your account yet, you need to make sure you do it, or you're going to fall way behind. It's going to be really hard to help you to the point where we might have to ask you to wait for the next course because if you're just extremely behind, right? One of the things that I said yesterday in class or last night in the Spanish class was that it's pretty hard for us to help you if you haven't opened anything yet, right? So go ahead and open it. Open a couple of returns, start working on it, and whatever you get stuck, we're going to help you. But if you haven't opened a return yet, it's pretty hard to help you that way, right? So we take some of your part as well. So it's like someone not understanding homework, right? In regular school, if you haven't started at school, at least haven't written your name on the paper, right? It's pretty hard to help, right? So let's go ahead and make sure you create your account and you have your you start your practices. You're not going to have a test this week, so you are actually your test is going to be the practices we're gonna talk about at the end of this class today, right? Those have to be completed. That's just gonna be your test at the end of this week. So, all right. So let's talk about. We're gonna go into a return here, and let's find a return here. Let me filter here by in progress and see if I can find anyone that has someone who potentially has a what we're looking for. All right, that one doesn't look like it. It'll probably that's a good idea right there. Let's see. I think it was Alejandro. All right, there we go. So here's a married filing jointly couple. We're gonna talk about this couple right here. What I'm gonna do is I'm gonna change his Social Security to I'm gonna change his ITINs to Social Securities, and I'm going to quickly add a W-2 just for the example. I'm gonna add the W-2 from the taxpayer. So for the taxpayer, and I'm gonna go back to the return here and add this W-2. So $25,916 for the employer, 202-794-185. There you go. And the employer, or the income is $25,916 with 80 cents. And we're gonna, as you can see, these numbers are different. So this is a good time to show you that these numbers are different. So we're not gonna pre-calculate that because these numbers are different. So 26,049, and then 26,049 again. As you can see, numbers from 3 and 5 are different from number 1. So, and then number 2 here is $2,103. All right, so we have our W-2 there. Let me see if there's another W-2 somewhere. And it looks like there's not. So, so that's good, right? So I just needed to add a W-2. So, and then we're not going to talk about insurance today, so I'm going to just do this right here. If you want to know more about insurance, you should go and watch the video, the insurance video. And I'm going to say no dependents, e-file, they're getting a paper check. And I'm going to put a couple of dates in here just for, so I'm going to put a couple of dates here, so just so that we are able to move on from this process, right? This is their PIN right here. So we are able to move on to the next process, to the next part without any issues. So I'll put the today's date in here again. All right, now we have the main info in green. So I'm going to move on to what I need to do from the scenario, right? So the scenario says that I need to complete a Schedule C, and I need to take the business use of home. So for that, I'm going to ask the customer about income for the Schedule C. And I'm going to say, hey, Mr. Customer, what is the income for the Schedule C? And apparently, Barbara has gross receipts from the business, right? So that means that Barbara made $13,234, right? So when we looked at the scenario, it says that Glenn works as a reporter, that's his job, and Barbara runs a craft business, right? So she's the one that runs the business, the side business, right? So let's go quickly and let's go ahead and add a Schedule C. So what we're going to do is we're going to add a Schedule C. I'm going to come up here to forms and add Schedule C. All right. And as you can see, Schedule C is down there. Here, let me do it one more time because that went very quickly. That was too quick. I'm going to add it one more time. I'm going to say Schedule C. So you can see it's right there. Don't get confused between Schedule C and a Schedule CEC. You already learned the differences in class. You already know the Schedule CEC is for taxpayers with expenses of $5,000 or less. But if the customer has $5,000 or more, you need to do Schedule C. So why don't we do that first? Why don't we look at her expenses? Look at the expenses right there. It's not about the income, it's about the expenses. So when you look, $455, you can add them up, right? $455, 455 plus 331 plus 300 plus 1309 plus 615 and 125. That's barely 3135. Even if you do the square feet, use of home square feet, you might not make $25,000, right? So I mean, you might not make $5,000. So that's something that you got to pay attention to. Look at the expenses before you start adding any forms, right? So the form, I don't think that this this customer should file Schedule C, but then you'll say, wait a minute, this customer does have to file Schedule C. Why? Because they're trying to report the use of home. They're trying to report 980 feet, and in order for you to report use of home, you have to use the Schedule C. So that changes the situation, right? So I'm going to move over here, and I'm going to use Schedule C. And I'm going to begin filling out the Schedule C part. Taxpayer, whose Schedule C is this? I'm going to say that it is the spouse, right? Don't worry about the name. Or if you want to be more, let's go ahead and change the name. Let's say Glenn. I think it's Glenn Brown, right? Let's go ahead and change the name so you don't get confused. So Glenn Brown and I forget her name, Barbara Brown. Okay, Glenn Brown and Barbara Brown. There we go. All right, so if you go back to the Schedule C, I'm going to choose, this is Barbara's form, because as you read in the file, in the scenario, she's the one running the business, right? What is the business about? It's a craft business. Craft business. That's what I'm going to write here. Craft business. A business code is required. I'm going to write 99. I'm going to write all those nines for now. What's the business name? They did not provide the business name. What's the EIN number? They did not provide the EIN number, so that that means that more likely there's none. And remember, it's not required. The business is, what's the business address? The business is run out of the house. So I'm going to click on that, and it's going to bring me the address for the house. Accounting method, I'm going to say cash. Most businesses are going to use cash, but don't assume this. Make sure you ask your customer, if they did cash or accrual. You should understand this very well. Did you materially participate in the operation? Yes. This is based on what the customer is telling you. Did you make any payments in 2016 that will require you to file 1099s? Well, let's go look at their expenses. I don't see any payments here that will require them. I don't see them paying anybody. So I'm going to say no. I'm going to say no. And then I'm going to move on to part one, income, the income section, right? So I'm going to go ahead and move on to part one, the income section, right? So I am going to be right here, part one, income section. So gross receipt sales. The first question, gross receipt sales. As you can see here in the example, it says that Barbara made 13,234 gross receipts from the business. All right, so 13,234, right? That's what the book says, 13,234. So, and you know, it also says in here that she also had returns of $1,520. So I'm going to look for returns, which is number 2, and I'm going to type that amount in there, $1,520. Okay, and that is going to decrease the income. As you can see now, the income is not 13,234, but 11,714. So I explained this to you in detail last week, you know, on how this works. If you don't remember this, you need to go watch the video for the Schedule C. Go back and watch that video. But I showed you in detail how line through 7 worked and how do you come up with these numbers. Perfect. So advertising is very it's the first line of expenses, right? So we're going to move on to expenses. Let's move on to expenses. Here we go, expenses, and let's go back to the book and see what she says. She says in advertising she spent $455, so that's what I'm going to type here, $455. She also says that in office expenses she spent $331. So I'm going to look for office expenses, line 18, and I'm going to type $331. She says that in fees she spent $300. What fees? You'll have to ask the customer what kind of fees are those. Are there fees relating to the business, right? She says that in supplies she spent $1,309. So go look for supplies, line 22, $1,309. She says that professional services she spent $615. So go to legal and professional services, $615. Might be paying the tax preparer, a lawyer. License for the business, $125. Okay, so license for the business. So we're going to go here and we're going to look for license in taxes, right? 600. So what was the amount? 125. All right. So there you go. You already have some the expenses in the system. As I told you before, the system is going to do the math for you. So the system's already done math. So as of right now, she has $3,135 in income, and she has a tentative profit of $8,579, right? So she will have to pay taxes on those $8,579, right? Remember, she'll have to pay personal taxes and also self-employed tax. So we'll get to that in a second. All right, so it looks like we've added our first 1099 with no problem. We added our first 1099. The last question you see here is very important. Was part of your home used exclusively for business activity, right? And I'm going to say yes, it was, right? And it's all gross income from this trade or business from qualified business use of home. I'm going to say yes. And then I'm going to say, what method am I going to use? Am I going to use the simplified method or the 8829? I'm going to show you both right now. Remember, I told you that the simplified method is basically saying how many square footage you use times the $5, right? So if you remember that, we said, you know, if we use 980 feet, we're going to say that times $5. I'm sorry. that times $5. That's going to give us our amount, right? So you don't have to do any math. You'll let the system do it for you. So here we go. Let's use the simplify method. Let's not use 8829. Let's use simplify method. And simplify method is going to say your home, the square footage of your home, and she has already provided that for us, right? She said that the square footage of her home is $3,600 and that the work area was 980 feet. So 3,600 feet, okay, and then the work area, it's 960 feet. So there you go. There you have it. You have your, as you can see, that change right there, right? You had a change right there in your expenses, right? And I'll show you here in a minute. This is now your new net profit. But let me do that. Let me take this away. It's 960, and you see how that net profit goes away. But I want you to pay attention to this right here. Pay attention to line 30, expenses from use of home. Okay. When I put the 930, I'm going to put the $960 right there. You're going to see your credit right there, your deduction right there. Very simple. Very, very simple. Okay. So how big is your house and how big is the space that you're using in your house exclusively for it, right? So I just show you the business use of home simplify method. Very, very simple. Just let the system guide you through it, right? Now let's go ahead and use Form 8821. So let me click on that Form 8821. What that means is that now, I'm sorry, 8829. What that means is now that I have to go into Form 8829. As you can see on the left side of your screen, 8829, it's right there, Form 8829. So now we're gonna have to file this form, right, and say, okay, this form belongs to the following activity: business, date, home was placed in service. I'm gonna say the beginning of the year. We're doing 16. Area regularly used and exclusively for business. I'm gonna say 960. Total area of my home, she said that it was 3,600 feet. So that means I am using 26.67% of my house, okay? 26.67 for the house, right, of my house. So very important, right? So that's the amount of deduction that I'm gonna be able to claim on the rest of the stuff, right? So now I can come to expenses here. Enter copy of Schedule C. So I'm going to say 1, right? It goes to Schedule C1. Okay? What do I mean by that? Sometimes I can have 1 or 2 or 3 Schedule Cs, but I only have 1 right now. I only have 1 Schedule C right there. Okay? So this is why it might just be a good idea that you use the simplify method. It's a lot easier to use the simplify method instead of the form, but if you want to use the form, you can use the form. Now we're going to say, all right, out of all the expenses, right? Well, how many expenses I have? Deductible mortgage interest? No. Do I have insurance? Yes, I paid $200 in insurance. Rent, if I qualify for that, I paid, you know, just to give you an example, $10,000 in rent. And you'll start seeing here the cut, the depreciation expense that you're going to have here in a second. So repairs and maintenance, $1,500. Utilities, $1,500. Other expenses, $500. Remember, I want you to go back to the class and think about that, right? Think about the you know, what we talked about in class and what can be deducted and what cannot be deducted, right? So let me make a clarification here on rent, right? That doesn't mean that you can just you can put your rent in there. No, you can put the part of the rent that you use, right? So for instance, if I paid $10,000 in rent, $10,000 in rent times the 26.67, right? 26.67. So $10,000 times 26.67. You'll find there that is $2,670, right, or something around that. So $10,000 times 26.67. And what I'm trying to say is, so we'll do that, you know, $2,667 right there, right? That's the amount that you can deduct right there. So those are your expenses. So let's go back to the Schedule C. You know, we fill out this form already. Let's go back to the Schedule C and see what our expenses. Your home expense. There's your deduction for the expense of use of home, right? So remember, this is a lot bigger than the other one, right? But at the same time, you want to make sure that you're able to prove everything, right? That you can deduct. So, for instance, in this case, I would say, Mr. Customer, what are you reporting here? Are you reporting the What are we reporting here? Are we reporting the total amount, or are we reporting the are we reporting everything, right? So he's going to say, oh, we're reporting everything. Oh, okay, Mr. Customer, we can't report everything. We can only report the 26%. So if you spend $1,200 in insurance, it is actually $1,200 times 26.67%, right? That's $320, right? $320. And you'll get the point there, right? You know, again, that's rent, you know, 420 bucks, 1,500 times 26.67, 400 bucks, and you'll get the point there, right? Office expense, $100, and there you go. That's your actual expense. So whatever the expense is, I'll show you this, right? Whatever the expense is, you need to multiply it by this, all right? And that's where you're gonna have to do a little bit of math, right? Because whatever the expense is, you're gonna have to multiply it by this. So, you know, if you spend $1,200 in, and I'll just do it here on the screen. If you spend $1,200 in, let's say, in internet, times, you're going to say times that, right? Times that. So that's going to give you the actual expense amount. So $1,200 times 26.67%, $266, right? Or close to $267. So that's your expense, right? That's what you are going to report down here on the expenses, right? Not the actual 200 bucks, right? So I wanted to give you I wanted to give you both examples, right? So you know, some people get confused and they start adding all of the amounts, and it doesn't work that way, right? So in the end, whenever you are done entering the expenses, you'll see here that the amount ended up being $3,900 bucks, right? $3,900 bucks, so not $8,000. So let's go back to Schedule C, page 1, and now here's your deduction, right? Here's your home deduction. But remember, this is a good flag for audits, right? If you can't prove it, don't use it. If you can't prove it, don't use it. If it's not exclusively for the business, check this out right here. Exclusively for the business, don't use it. I'm going to give you a recommendation before we move on from this. I want you to just go ahead and use your the simplify method, okay? Just go ahead and use the simplify method. That's my recommendation, especially your first year. Just say, you know what, your home is 3,600 feet, and you use 960 feet exclusively for the business. There is your credit, right? Oh, not your credit. There's your deduction, $1,500 bucks. That's it, right? Don't get too caught up on using, you know, the other form because you might make mistakes. And if you do use the form, make sure you have all the proof, you have all the documentation, and make sure you have someone checking this for you. Perfect. So we're gonna make the first break of the class, and then when we get back, we'll start looking at a Schedule C in another way. But you know, let's take a first break, and then we'll be right back. All right, so we are back. We're going to continue the class here in just a second. We're going to finalize this return. And as you can see, let's go back and let's see if we have completed everything, right? So we already added a Schedule C, and we already took the use of business home. So yes, we have completed everything so far. But remember that they also said that they wanted to, if you read the scenario, right? They said that the couple, this is why it's so important that you read the personal and the additional information, right? Remember, income taxes is about reading. Read. If you read, you understand. So, the couple had several medical expenses last year, and they would like to itemize deductions. If it would be more beneficial, right? The key thing here is that they would like to itemize deductions, but you are going to determine whether it is beneficial or not. So let's go to those. Deductions, right? Mr. Customer, that's fine if you want to itemize your deductions. By all means, we can help you with that. But I need proof. I need documents, right? So here you go. It says that Glenn had he had to pay $1,000 for an X-ray, and he also had to pay $50 out of pocket. Glenn had a follow-up of $480. And the couple drove 310 miles over the course of Glenn's treatment, 310 miles total. Both taxpayers went to the dentist, paying $40 per visit for their visit. And then there's an expense of a root canal here of $2,100. And I'm sorry about that. Barbara wears glasses of $244, and the prescriptions, prescriptions cost $720. I want you to have a calculator ready for that. Just have a calculator ready, because I don't want you to go into the system and open a form for nothing. Okay, so let's add it up, right? There's $1,000 plus $50 plus $480 plus $310 plus $40 plus $2,100 plus $244 plus $720. That comes to a total of $4,944, right? So I'm gonna write it there for you. So $4,944, right? That is the total of the expenses they're trying to claim. All right, I get it. That's pretty cool, right? They have those expenses. So you did it by hand and you said, no, sir, we can't do that. Why? Because you already have something called standard deduction. Okay, I want you to come here to page 2, and I want you to come to the standard deduction. And your standard deduction, because of your filing status, right? Because of your filing status, your standard deduction is already $12,600. So the IRS is automatically going to use the biggest one, right? This is your itemized deduction, right? This is what we call itemized deduction. And itemized deduction right there, and this is your standard deduction, right? Standard deduction right there. So which one's bigger? That one. That one's a lot bigger than this one, so you're not going to use it. You're not going to be able to use it. Even if you go and open the page, even if you go open a Schedule A, so I'm going to show it to you, and I'm going to do it anyways. What I'm trying to say is don't do too much. Don't do work that you don't need to do, right? So let me go here and open, and I'm going to look for Schedule A, and it's right there. Look, it's the first one. I don't even have to type anything. It's right there. Schedule A, itemized deductions. And everything they have is medical. Medical and dental expenses, they have $4,944. That's it. Check it out. No change. Absolutely no change. You know why? Because it's too small. It's not bigger than the standard deduction. So if I go back to page 2, check it out. There's nothing else there. But let me show you this. If the customer had brought me something that said $14,000, $944, that changes a little bit, right? That's going to change things a little bit. So I'm going to go back to the page. Look, nothing, okay? Because of his income. Because of his income. So let's say that he brought me something that said $16,000, right? Let's exaggerate a little bit. Look, it's beginning to change. It's beginning to change. You see that let's go back to page 2, and now the itemized deduction change. You see that to 13,000. But you want to make sure it's believable. Okay, Mr. Customer, did you actually pay $16,000 out of your pocket in medical and dental expenses? Show me where you paid it, and you got to be very, very, very adamant. You got to be very detailed with how you review those documents. Okay, so I'm gonna bring it back to 0 because we're not gonna use it. The reality is that if I only type $4,944, it's not gonna do anything. It's not gonna do anything for. So all I'm doing is more work, creating more work for me. So I'm not gonna do it because I am a professional and I know that this itemized deduction is not bigger than the standard deduction, right? So your deduction is $1,694, right? So you need to be bigger than the standard deduction. So I'm going to say, no, I'm not going to do that, right? So respectfully, Mr. Customer, this is not something that we can do. I mean, if you want me to, I can put it in the system. Absolutely, I can put it in the system. You know, I'm gonna charge a little more, but if you want me to, I can put it in the system. But it's not going to have any effect because your itemized deductions are smaller, way smaller than your standard deduction that you already received. Okay, so it looks like we have completed this return, this scenario, and we added Schedule C. We did we took the business use of home, and we also added a couple. We also reviewed the several medical expenses they had, And remember, the thing was, if it was more beneficial for them, but it wasn't more beneficial for them or for you, so we did not do that. Okay. But remember, medical expenses, itemized deductions, you're going to report those on the Schedule A. Schedule A. So we've done a couple of things today so far. We've added Schedule C. We looked at both simplified and not simplified version of the use of home deduction. And we've also looked at Schedule A on how to add this. How do we add this? What do you call this? The personal expenses, right? The itemized deductions. All right, perfect. So let me show you one more thing here before we go or before we move on to another part of the class. I'm going to show you, and I want you to write this down. I'm going to show you here on scenario 3. Scenario 3. Here is something important. Scenario 3, right? Scenario 3, you have someone claiming unemployment. Okay. This person, William Harrison, is going to claim unemployment. All right. They have a W-2, but they also have unemployment. Okay. So at some point of some part of the year, they had unemployment. So if the customer wants to report unemployment, they also need to present a form. And that form, it's going to be 1099-G. Please write that down. 1099-G. That is unemployment. In any state that you are, the form is going to be called 1099-G. So for the sake of time, I'm not going to create a new return. I'm just going to show you a return. I'm going to show you here how do you add it. How do you add the return, the unemployment? Okay. So I'm going to go to forms, and I can begin typing unemployment, right? And you're going to see right there 1099-G, government payments, 1099-G. Okay. So let's go ahead and select unemployment. We're going to work off the sheet. We're going to work off this right here, right? Who paid it? Georgia Department of Labor, how much you got, and all of that stuff, right? So let's go into taxpayers. And this belongs to the taxpayer. The address is the same. This is a standard 1099. What I mean by standard is that it's not written by hand. It's a standard 1099-G. Okay. And then I'm going to type the payer's information here. Right. The year. I'm going to assume that this is a 2016. Oh, I'm sorry, 2015. That you're going to find a year right here. I'm assuming just for the example. The payer's employer identification number, which is this right here, 133, followed by a bunch of X's. So you have 13375794185. Payer's name, Georgia Department of Labor, or whoever pays it. Okay, and then the address will be 148 Andrew Young Boulevard. So what's the zip code? 30303, 30303, Atlanta, Georgia. So Andrew Young International Boulevard, right? I'm going to do this for you for an example only. Andrew Young International Boulevard. I'm going to write it because I don't want you to say that I told you to do abbreviations on the right. And if there's a phone number, you write the phone number. If not, you don't have to worry about it. But now let's go to the important part, right? How much unemployment compensation you received? $2143.65. All right, right here, unemployment compensation, $2143.65. How much? Line number 2, 0. Line number 3, 0. Line number 4, which is the federal income tax withheld, it's going to be $48.29. 48.29, right? You see how the system does the rounding for me, right? So there you go. You've added, and you have it all in green now. You've added form 1099 miscellaneous, 1099G, unemployment, right? Very, very simple way to add this form. Before we move on to anything else, right? Let's talk about this on the 1040, and let's look at the income part on the 1040. I want you to pay attention to the income part of the 1040 because we have a few types of income in this return. Look, income. We have a W-2. We have a Schedule C, right? And looks like we're also going to have an unemployment compensation right there. And you can see it right there, unemployment compensation. Unemployment compensation, right? We have 3 types of income in this return. All of that income totals to $35,140. $35,140. So you have it right there. So I just show you, basically what I'm trying to show you today is how to add forms. There's a lot of videos that are going to help you with the forms. You need to go through through each scenario and understand how each form works. This is something that you're going to gain with practice, right? The more you practice, the better you're going to get at it. And the one thing I want to make sure that you understand, right? Those we are going to complete all of these scenarios. This is the intermediate package. So so the one thing I want to show you here in a couple of minutes is how to add a 1099 miscellaneous, and then we're going to wrap it up there. How to add a 1099 miscellaneous to a Schedule C or to a Schedule CEC. And once we do that, I wanted to leave that to the end so there was no confusion on cash and all this other stuff. You just saw me adding cash. How do you add cash? Now we need to add an actual form, 1099 miscellaneous. So number one, in this form, so what I just did is I added the Schedule 1099 miscellaneous, Schedule 1099 miscellaneous to a Schedule CEC. So the one thing that you wanna do, you wanna make sure is you wanna make sure that you understand that before you start adding the customer's information in the system, you need to review the forms, right? So in this case, I am reviewing the form and I'm looking at the form and I'm saying, okay, Mr. Customer, you received the 1099. What do you do there? And the customer is going to tell me, well, I am an employee. Okay. Do you own this business? Do you own Rome Builders? Are you a subcontractor? Do you buy material? Do you buy buy or use your truck for business purposes? Your car, your cell phone, any of that for business purposes, not for personal purposes while you're working, but for business purposes. No, I don't do any of that. So you don't have any expenses, right? So before I go into the system, I'm going to ask the customer this thing, because then I can define, because maybe the customer is, let me tell you this, maybe the customer is a subcontractor, right? And out of these $8,000, the customer can say, you know what, I actually paid somebody else and I bought material and this happened and that happened. So really out of those $8,000, I really only made $1,000 because everything else was expenses. I actually have my other job, my real job, and this was just a side thing that I did, but I didn't make any money. So you need to hear the customer's story before you start doing things, right? Because from there I can define and I can say, okay, we're going to go Schedule C or Schedule CEC, right? So I go to the system and say, okay, Mr. Customer, you said, and I'm going to give you a brief example here. So let me do this while let me do this. Let me delete this right here, okay? And let's assume that this customer shows up and says that you know, he has a normal W-2 job, and he also has this 1099. And the customer, you know, you begin asking the customer questions like the ones I just asked before. And the customer said, yeah, you know, I made $8,000, but $8,200, but a lot of that money went back to the business. Like I spend money in marketing, I spend money in paying somebody, I spend money in materials. I didn't even make any money out of it. Mr. Customer, do you have proof of that? Oh yeah, I have all the proof. Here you go. Here you go. All right, cool. So now the situation changes, because once you get all that proof and you start making all of the changes, then you know, when you start adding all of the expenses, you realize that these expenses are over $5,000. So you're gonna have to go Schedule C. So let's just make an example here and say that you have a customer with $8,249 in 1099 income, but he also presented you $6,000 worth of expenses, and he can prove those expenses. So what you're going to do is you're going to come to the system, you're going to add a form, you're going to say 1099, and there we go again, 1099 miscellaneous. But since you've already determined that the customer's expenses are over $5,000, you're going to choose 1090. You're going to use Schedule C. Okay, Schedule C, not CEC, but C. So why don't we do that? Let's open Schedule C. Okay, and there you go. Now we have our 1099, of course, here. This is a 1099. So let's do this part real quickly. Go back to the 1099. This was 034-794-185, and it was Rome Builders Inc. And it was in 2295 Shore International Boulevard, 31065. And let's see, it was 30165. 30165. There you go, Rome, Georgia. And his expenses were, or his income was $8,242 with 79 cents. All right, he runs up, and he paid federal taxes of $679 with 12 cents, 679.12. All right, and there you go. That's your 1099. But again, you are not done yet. You're not done. Why? Because your Schedule C now needs to be completed. You just added the 1099 to a Schedule C. So I want you to write this down. 1099s, miscellaneous, are always part of a Schedule C or a Schedule CEC. So 1099 miscellaneous are always part of Schedule C or Schedule CEC. Okay, write that down, put it in your notes. Anytime you see a 1099 miscellaneous, 1099 miscellaneous, not just any 1099. I'm talking about 1099 miscellaneous, right? This one right here, 1099 miscellaneous. Okay, when you do that, you know, when you understand that, and then you automatically think, okay, 1099 miscellaneous means I have to look for expenses first, and if the expenses are $5,000 or more, then I have to either open. If the expenses are $5,000 or more, I have to open a Schedule C. If the expenses are $5,000 or less, I have to open a Schedule CEC. All right, cool. So let's go back. And let's open our 1099. Let's open our Schedule C. And we'll do the same thing, right? Who owns this form? The taxpayer. Business, let's say, was construction. Business code, let's not worry about that right now. The business home, same address. Accounting method, cash. Did you participate in the business? Yes. Did you make any payments? Remember, he told us that he pays somebody. We're going to say yes. Did you file the 1099? Did you give this person 1099 and also gave the IRS a 1099? Yes. All right, cool. And now, as you can see, you already have your number from the 1099 right there, right? So from form 1099, this number from right here came right here, right there. Okay. And if the customer wants to add cash or anything else, you have the option right there. You can add cash. Okay. So perfect. So from here we're going to go to expenses. Let's just go to expenses from here, and I'm gonna create some expenses that the customer already said he spent $500 in marketing, in contract labor on that 1099 he spent $4,000, right? In supplies, let's go to supplies. He spent $1,500, right? So now he has in expenses, total amount of expenses $6,000 right there. So he has a profit of $2,243, and this is where the IRS is gonna charge him money, right? But this is what the IRS is gonna charge income tax. Did he use his home for? Let's say no for this example. And as you can see, our 1099 is already green, right? It's already in green. All right, so. That's one of the 1099 in Schedule C is already green, so that means that we are done with this form. And these are one of the things that I wanted to show you, right? It's adding a 1099. You don't just add it to the tax return. You have to add it to either a Schedule C or a Schedule CEC, and that's a very, very, very detailed process of how you're gonna do that, right? So make sure take a picture or do whatever you need to do. Take a note. Make sure that when you add a 1099, it looks like this. It has to look like this, right? It has to be part of the Schedule C, okay? Has to be part of the Schedule C or a CEZ, just like I show you on the notes. All right. So let's go to one last thing, and then we will close the class, and we'll talk about homework and testing and all that stuff. So all of the fun stuff. So I want to go to page 2, Schedule C, page 2. I'm going to be right here, Schedule C, page 2, and I want to show you the vehicle information. All right, vehicle information. We already did this on the form, but I want to show you how it works in the system. So for that, I'm going to quickly go through it. Question 43 says, when did I place the vehicle in service of the business? I'm going to say the beginning of the year. Calculate business miles at the standard mileage rate. I'm going to say yes. Okay, as you can see, for this purpose, the mileage says 0.54, so don't worry about that. We're just using an example right now, right? So the only thing you have to do is put the business miles right here. So I'm going to put $1,500 miles right now, and the system is going to calculate everything for me. Check it out. Now I see that these are the miles. These miles are going to be multiplied by 0.54 or by whatever the standard mileage rate is at that point, and my deduction is going to be this right here, $810. Those $810 are going to be part of line 9 of my expenses. I'll show you there. Automatically, the system is going to bring them up here. Car and truck expenses from part 4, page 2, right there, automatically. As you can see, this box is shaded, right? If I want to type in there, I can't type on those forms. That means that the number comes from somewhere else. And now my expenses, my total expenses are $6,810, and my profit for this Schedule C is $1,443. So let's go see how it looks on the 1040, page 1. Let's go see the types types of income that we have on this form. Income right there. I have my W-2. I have my my interest income. Okay, I have my business income. You see, it's not showing me that I have 8,000. It's actually showing me that I only have 1,433, because it doesn't matter how much money you made, it's how much money you keep in the business, right? That's where the IRS is going to tax you. So this is where some people get creative, and they're like, oh, well, let's put more expenses. Yeah, but can you prove those expenses? And also, when you go to the bank's going to be like, hey, you don't have any money. You don't have any money, right? You don't make any money. A lot of money comes in, but a lot of money goes out too, so you don't make any money. They're not going to give you a loan that way. So let's see how much. Let's see what else do we have here. All right, it looks like that's it. So I just I want you to make sure you understand that, you know, everything that you report as income, whatever forms you report as income, they're going to be here on 1040 page 1, line 10 through 22. Everything's going to be summarized there. Everything is going to be either taxable income, or I'm sorry, it's going to be from line 7. I'm sorry, 7 all the way to 22. It's either going to be wages, salaries, taxable income, interest income. It's going to be business income, alimony, tax refunds, capital gains, whatever the IRS considers income. It's right here on line 7 through the 22nd. Right, to the 22nd right there. And then you'll have your adjustments here. Some of you saw me doing some adjustments. The one thing I want to show you before we go to any classes or any homework, I'm sorry, is that Schedule C, Part 2. Here, let me answer these questions real quickly. You already know what these questions are. This is the questions about the deduction that we're claiming over here. All right, so the because the Schedule C, right? I had a leftover of $1,433. You remember that? So now I'm going to take you to page 1040, page 2, and I want to show you something here. Something called self-employed tax. And you and I talked about that. This is an extra tax. All right? You and I talked about it. This is a self-employed tax because a person has a Schedule C, has a 1099, right? So it's called self-employed tax because on those $1,433, the person didn't pay any Social Security or Medicare. The IRS is gonna tax you with something called self-employed tax. All right, and the self-employed tax cannot be deducted, cannot be reduced by credits. I'm gonna say that one more time. The self-employed tax cannot be reduced by any credits. So if you have credits here for education or whatever other credits you have here on line 48 to 55, the self-employed tax cannot be reduced by that. You have to pay that regardless. So if you run into these customers, right, the Schedule C's, the 1099s, customers, 1099 miscellaneous, non-employee income, they're always going to pay that self-employed tax. So make sure that you keep that in mind. So just wanted to show you that as we move through the 1040. And the last part I want to do is it's right here on 1040. You know, how do we explain this return to the customer? Mr. Customer, your income is $24,000. Your adjusted gross income is $24,584. Minus you because you're single, you receive an itemized deduction, or I'm sorry, a standard deduction of $6,300. You also receive an exemption of $4,050, right? So that means that your taxable income is $14,234. Out of that, the IRS calculates an extra $1,670 in taxes that you would have to pay, right? That you would have to pay. So if you follow me here, $1,670 extra that you have to pay, right? This is what you should have paid throughout the year, but this is the difference between what you should have paid and what you didn't, and what you actually paid, right? All right, perfect. So here you go. You have you have that those $1,600 right there, $1,670 right there, that in taxes, right? But you also have a $1,500 education credit, right? So that is going to be part of that. Okay, that is going to be part of that. So in reality, the only tax that you're going to be added, that's going to be discounted at your refund, is going to be $1,070. Okay, $1,070. So $1,070. I'm sorry, $170. I'm sorry, $170. It's what you're going to be taxed, and that tax is going to come out of that refund right there. Okay, it's going to come out of that refund right there. So that's something that you got to pay a lot of attention to. Is how this number, why are these numbers here? We're going to be working with these a lot, so don't worry about it. If I don't understand it right now, that's fine. Don't worry about it. Okay, so you're going to have, as you can see here, I want you to understand. Look, I want you to pay attention to these. Here's your calculated tax, and then here's your self-employed tax. So when you add those two, that's $372. $372, and that's what you're going to see at the very, very bottom right here. Total tax, $372 right there. That is going to come out of that. Oh, he already came out of that. He already came out of that. Okay, that already came out of that. So your refund was actually higher than that, but since you owe that tax based on your income and based on the types of income, he already came out of that. Okay, so now you can explain to the customer that his refund of $3,000 works the same way, right? His refund of $3,000 is going to work the same this way, right? You have your $2,600 here of income taxes, plus your $679 of the non-employee compensation. You also have $1,000 credit for the American Opportunity Credit, and you have $733. I'm sorry, of net premium credit, which we talked about yesterday. All right, that leaves you with an original refund of $300, an original refund of $4,334. But since you owe the IRS $372, so minus $372, your refund comes down to $39.62. Can I show you one more time? Your original refund is this, right? But since you owe the IRS this $372, your refund is actually that right there, $3,962. So there you go. That's a very, very quick way of explaining your refund. The customer is going to be like, well, how do they come up with this $372? Number one is your self-employed tax. And number two, you had $1,670 of taxes that you didn't pay correctly throughout the year. But since you had that credit, since you had that education credit right here, that took $1,500 away out of that. So you only have $170 left to pay the IRS, and you're going to pay that out of your refund. Plus your self-employed tax, you're going to pay that out of your refund. So your original return of your original refund of $43.34 gets deducted and reduced to $39.62. So that's how your refund works.